and hiked rates by 25 basis points. But overall, if you see, the commentary seems that this is probably going to be the last. What it means for crude, joining us on the show is Azlin Ahmad, editor, Crude Oil Argus Media. Azlin, good morning and welcome to the show.
Good morning. Thank you for having me.
Always a pleasure. Azlin, my first question coming to you is, if you see the last three sessions, we have crude oil which is plummeted to nearly a 17-month low, post which today morning, Asian markets, we've seen again a mild uptick that has come in yet again. And you have the Fed, which has gone ahead and cut rates, but signaled a pause going ahead. What does this actually mean for crude, according to you?
Yeah, that's a good question. I think that the trade it's been a sort of like a bearish market this week for crude oil because we've just seen it fall steadily for the last few days. Obviously, the Fed decision overnight to raise interest hikes, even though it was expected, was the latest trigger to push prices a lot lower because it did create uncertainty about the demand outlook. But also that came on top of some I would say slightly bearish news on the market over the last couple of days. I mean, one of it was the China factory PMI, which came in at 49.2, and that's like the first contraction we understand since December. So I guess there is still this concern in the market about how demand is, whether we're going into a recession, and that has put a lot of pressure on crude oil prices this week.
Right. So overall, is it rightful to say that traders are actually growing more fearful of a US recession this year, which could probably severely crimp demand? Secondly, from a China perspective as well, the upside risk to China's demand is something which is largely playing out.
Mm. Well, yes. So we do think the Argus consulting team at this point do have this view that there will be a mild recession in the US, and the brunt of it will probably be in the second half of this year. So yes, there are that fears. With China demand, we do still think that there is a recovery in China demand over this year, but it may not be as strong, maybe as some had hoped or expected, and it's definitely not going to be a surge. We do see slow recovery in China. I mean, that's for sure. But I think that it's a slow recovery rather than a demand surge as the market had initially hoped. So I think that those things are, weighing on the crude prices. So at this point, OPEC Plus has to deliver on cuts because there is the concern that demand is slow, that there is slow recovery in demand.
Mm.
That is the main factor weighing on the current oil prices. But we have seen prices stabilize, as you say today.
Right. So, Asleen, another question that comes over here is, and I'm playing the devil's advocate here, the potential supply disruptions that everyone is watching out for in Iran and Russia. What would that mean? Is that something which will be able to provide enough support from here on?
Possibly. Right now, let's just say that the Argus consulting team, before the OPEC Plus cuts
Hmm.
was announced on 2nd of April, the Argus consulting team did feel that the market was oversupplied and that the decision by the OPEC Plus to voluntarily reduce production meant that we would see a more balanced market. Okay, so if there are supply disruptions or supply cuts from Russia, from Iran, it could mean a slightly tighter market going into the second half of this year. But at this point, we are seeing that Russian production and Russian exports of crude and products are actually quite high. I mean, it has been very resilient. And I think
Hmm.
that the Russian crude and products exports have been higher than many analysts in the market expected. A lot of analysts, even the Argus consulting team, expected a much bigger decline in the Russia production and Russia exports. And we haven't seen that.
Right. So overall, if you see, I was just reading a Bloomberg survey which showed that OPEC crude oil production actually fell by almost 310,000 billion, barrels per day in April. And with that, if you see, if you have to look at the month of May as well, OPEC production cut actually takes effect, right?
Mhm.
So, taking that dynamic into consideration, what is the kind of levels we could see in terms of crude oil prices from here on?
Yeah, it is at this point. I have to admit that it's really hard to have a forecast, a clear forecast of where the oil prices are heading. But just looking at how far it has fallen this week, I think the feel on the market is that we are close to the floor, assuming that nothing major happens in terms of a supply disruption. So I think that where we are right now, we are like what 71 or low 70s for ice Brent that I saw this morning. I think we are more or less on the hitting the floor. I guess going forward, we have to see whether the OPEC plus cuts are fully delivered, and that could help balance out the market. And also, I think the market will also wait to see, could there be more cuts from OPEC plus? That's the question mark, and I'm not sure.
Right. But okay, so from here on, where is that support that we are seeing in terms of the lower end of the band for crude?
I'd say roughly, okay, looking at where the fundamentals are right now, I would say around this where we are or around the 70, maybe close to the floor. Okay, I think that we're not going to see a crash to
Hmm.
the $50 or $40 level. And the one thing that we have to keep in mind is that should there be a real bad recession, that demand gets hit and oil prices fall another, what, $10, $15, I think that OPEC Plus will react quickly because they have proven that they can increase or decrease production quite quickly should there be a need be. And I guess we're not sure whether could there be a possibility that the US, if oil prices really fall a lot more, maybe the US will start buying crude to refill its SPR. So I think those are the two things that could potentially provide support should oil prices really fall even further from where we are right now.
Right. So, Azleen, overall, something like this, what would it mean for an oil importing country like India, according to you?
Well, right now, it's probably a good thing for the oil importing countries like India, like China, because at this point, the one thing that what we've heard from the market is that because of the easing demand and because there are quite a lot of product supplies, refining margins or refining profits are under a bit of pressure. So over the last 2 weeks to 3 weeks, the refiners in Asia Pacific have seen their margins sort of like steadily decline. So that's a bit of a worry. So if oil prices, crude oil prices, are fall, then at least that would provide some reprieve, I guess, for the refiners across Asia Pacific, including in India.
Right. Another aspect what I want to speak to you about from an India perspective is India's oil imports from Russia. Now, that's what markets are suggesting that probably it's seen peaking with the kind of competition that's coming in from China in the month of May.
Mhm.
Already been able to improve the market share that comes in from Russia to 36%, but now a slow month on month increase fueled is what is on the expectation. What would this mean if you have to take the Russia equation into consideration?
Okay, so the Russia crude, I guess what you're asking is the Russia crude in terms of the overall India imports,
Right.
yeah? Okay, so right now, in the last month or so, we've seen that the imports of Russian crude into India, it's actually hit a record. I think it's about 1.6, 1.7 million
Hmm,
barrels per
hmm,
day.
hmm.
So that's pretty high, right? Going forward, it could still increase, but the feel that we get is that these India buys a lot of all this Russian crude on spot market, and what
Hmm.
they have had to back out to get to take this Russian crude is that they've had to back out spot crude, and that includes crude from Nigeria, from US, from Egypt, from various countries. But Indian refiners are still buying Middle East crude on term, and at this point, it is still supply security, so they will probably not want to reduce term supplies to buy more Russian crude. So the feel we get is that we are almost at the peak. I think it's going to be a little bit hard for Indian refiners to boost Russian crude imports i- much higher than what they are doing now.
Right.
So
So
yeah,
overall, what we're trying to say is basically, I mean, there is a limit to the volume of the medium sour crude that Indian refiners can process, and they do have to fulfill their term contracts as well with their Middle East suppliers, right? And that's
exactly.
what will probably, uh, I mean, impact the volumes with regards to Russia and the bargaining power with Russia as well.
Yes, at this point, yes. So at this point, we think that the percentage of Russian crude in the overall China import basket, may not jump higher. Maybe a little bit, a few percentage increase, but not a huge jump because yes, they would have to start cutting term Middle East, and I think that at this point, this is not something that the Indian refiners are willing to do because there is still that security of supply that they are concerned about.
Right. So tell me one thing. If you have to talk about, I mean, the kind of deals that India and Russia has in terms of the negotiating power for Indian refiners, clearly the discounts have always been in that range of $15 to $20 per barrel between India and Russia. If this is going to be the scenario, by how much do you think that the discounts could come down to?
I don't think the discounts are going to come down significantly. We've already seen in the last like this month, well, actually in April, the discounts for Urals
Hmm.
landed in India. It's actually been hovering about maybe around the 12, 13, $14, which is lower, right, compared to the $15 to $17 discounts that we saw, a couple of months ago. I think that the one thing that um, Russia may use supplies to keep its prices high. And I think that then they will pull back some of its Urals production if it feels that the prices are getting too cheap for the buyers. So I think that we won't see the discounts um, veer too much from I think between the 12 to the $16. I think it's going to be a tight range around that kind of level. Because if it goes if the discounts become too big, I think that China will come in to buy more. If the discounts get too small, then the Indian refiners will sort of like they have a lot of leverage, and they may say, "Okay, fine, this is too expensive for us. You need to offer a lot lower prices for us to continue to buy Russian crude."
Right. Another aspect that just comes to my mind right away is with regards to, I mean, we've gone below, hit almost a $69 barrel mark, right? Now, do you think that the cut that the OPEC was planning
Mhm.
to come ahead and support crude prices, that's something probably which is not working? Do you think that's a scenario?
Yes, that's a good question. I think that personally, I think that we will see a slight recovery in the crude prices over the next month. I think that this deep fall that we've seen over the last week is quite significant. It's quite drastic, and it just came that there was a lot of news. That push prices together. There were a lot of various news that came together that push prices down. I think that we will see some recovery. We may not go back up to the high 80s in the very short term. But it depends. I think that OPEC may watch the market very closely,
Hmm.
and they may want to see how demand pans out first before they think about further cuts. But, well, it's always a wild card with OPEC Plus because only OPEC Plus knows what OPEC Plus will do. It's very hard to predict what they will do, as they have shown us over the last few months. They are quite a
Right.
surprise.
Right. And Asleen, overall, if you see the Brent's prompt spread, right,
Yeah.
which clearly reflects the difference between your July and August futures, premium is narrowed to almost 15 cents from 43 cents earlier.
Yes.
What is that indicating from a trader perspective?
Yes. I think it does indicate that the market uh, there is bearishness in the market. I mean, it's very odd. if you look at it, the prices maybe about a few weeks ago, it's very odd to see prices so low, but the backwardation pretty wide because it's odd. Usually when the market is weak, it moves into a contango where the forward prices are higher. So I think that right now we are seeing this shift into the market, and the supply tightness or any worries earlier that the market had about tightness in supply has basically now, I think, have more or less been erased. This is all assuming that we don't see any unexpected outages in Africa or in Iraq. So I think that right now it indicates that the market is not terribly worried about global supplies, that they
Hmm.
think that supplies is available to meet the demand, at least in the
Right,
next few months.
right. And very lastly, you have the next OPEC meeting, which is on the 4th of June. We are almost a month away. Uh, what is it that you think they will be discussing? Because clearly, production levels for July 2023 and beyond will be on the cards. But
Yep.
anything else taking the current market into consideration that could be on the cards?
Well, I mean, I feel is that they would probably look very closely at how the China recovery, because right now China demand it is sort of like the big determination of
Hmm.
how the market moves. So I think that in when they meet, they will probably look very closely, and they might have some data about how they see the China recovery and how that would affect their decision.
Right. So I think it's going to be an interesting month as well from here on, and
Yes.
what comes out of the open and where crude prices settle. From just one last question, Azleen, if prices have to recover from here, what's the top that we can look at?
I think that we're not going to go up above. I don't think we are going to stay above $90 on a sustainable basis. I think that we can go up to above 80. That's depending on how the demand pans out. But I think it's going to be hard looking at the fundamentals and the demand right now
Mm.
for ice Brent to stay above $90 on a sustainable period of time, at least in the first half of this year.
Right. So that's going to be an interesting
Yep.
range we should be watching out for. Thank you, Azleen, so much for joining us on the show. Always a pleasure to speak to you and get insights from you. Stay safe.
Thank you very much. Bye bye.